Subscribe to my channel Report Stock.
Have you ever stared at a company's financial report
Uh-huh.
and felt like you were reading two entirely different stories?
Oh, definitely. Yeah.
Like one headline shouts about massive revenue growth, maybe a clear beat on expectations, and you think, great.
Oh, right. Looks fantastic on the surface.
But then another headline from the very same report sort of whispers about missed profit targets, and suddenly the stock tumbles.
Mm-hmm.
It's a real puzzle, isn't it?
Yeah.
How can a company be, crushing it on sales, but still fall short where it counts for some investors?
It's actually a pretty common paradox, especially in the world of high-growth companies. And often it's not a mistake, it's a deliberate strategic choice.
Ah.
The top-line numbers don't always reveal the underlying strategy.
Precisely. It's like trying to understand a complex character from just, like, one chapter. And that's why today we're taking a deep dive into the Q2. That's the second quarter of calendar year 2025. Results of Mercado Libre, ticker NASDAQ.MILI.
Big player in LATAM.
Huge. For anyone maybe less familiar, Mercado Libre started as an online auction platform. But wow, has it evolved? It's now a leading e-commerce and fintech powerhouse across Latin America.
Real ecosystem.
Exactly. So, our mission today is to unravel the key figures, try to understand the strategic thinking behind them, and distill the most important nuggets of knowledge for you.
Sounds good. Let's get into it.
Okay, so kicking off our look at Mercado Libre's Q2 performance, it really does present, well, a tale with two distinct sides.
Bit of a mixed bag.
Yeah. On one hand, there's undeniable revenue strength. Mercado Libre reported a substantial $6.79 billion in revenue for Q2.
Which was a beat, right?
It was. That figure surpassed analyst estimates of $6.54 billion by a pretty robust 3.9%.
Okay, so that's solid. And the year-on-year growth.
That's where it gets even more impressive.
Yeah.
It represents a significant 33.8% year-on-year growth. Wonderful, really.
Wow, yeah. For a company of Mercado Libre's scale, I mean, after evolving into this comprehensive one-stop e-commerce and fintech platform, sustaining that kind of revenue acceleration is, particularly impressive.
Absolutely. But then, like we said, we shift to the challenging side. Profitability metrics.
Right, the other side of the coin.
Their GAAP profit, that's generally accepted accounting principles profit, or EPS, earnings per share, came in at $10.31 per share.
And the estimates were higher.
They were. That was 13.3% below analyst consensus estimates of $11.89. So clear miss there.
Oof, okay. 13% is noticeable. And was it just GAAP profit or other metrics too?
Good question. It wasn't just GAAP profit. Adjusted EBITDA, that common measure of profitability before interest, taxes, depreciation, amortization.
Used to show underlying operational performance, yeah.
Exactly. That was $1.02 billion. And that was a 3.2% miss compared to estimates of $1.06 billion. That resulted in a 15.1% margin.
Okay, so a miss there too, though smaller. What about operating margin? That often tells a story.
It does. And perhaps even more telling, their operating margin, which shows how much profit a company makes from its core operations. For every dollar of sales, it dropped to 12.2%.
Down from
14.3% in the same quarter last year. So, yes, clear margin compression happening.
Right, okay. Seeing those margins compress would certainly raise questions for many people looking at this.
For sure. But here's a positive counterbalance that really stood out. Free cash flow.
FCF, always important.
Their free cash flow margin saw, a significant increase. It jumped to 38.7%.
38.7. From what?
From 12.8% in the previous quarter.
Wow, that's a huge jump quarter over quarter.
It's remarkable. And this is crucial because, free cash flow is the cash a company generates after covering its operational and capital expenses. It's the real money available for growth, paying down debt, maybe even dividends down the line.
Right. It shows financial health and, crucially, flexibility. That kind of jump is a very strong signal.
It absolutely is. So when you look at this mixed bag of numbers, strong revenue growth, but then some clear pressure on traditional profit metrics like operating margin alongside booming free cash flow, the central question becomes, how can a company be growing so fast in revenue but still miss on profit expectations? And what does that free cash flow surge tell us about their strategy?
That is the strategic puzzle we need to solve. Did the company give any reasons?
They did. And Mercado Libre actually provided a very direct explanation for this margin compression. They stated it was, and I'm quoting here, primarily driven by growth investments.
Okay, investments. Makes sense. What kind?
And marketing spend also increased to support our free shipping and Mercado Pago campaigns.
Ah, okay. Free shipping, Mercado Pago. Those are big strategic levers for them.
Exactly. And what's insightful here is their expressed confidence in these choices. They follow that up by saying, quote, "We are confident these are the right investments to make for the benefit of our users and our ecosystem."
Right. So they're framing it as a deliberate choice for the long term,
Right.
which, raises an important question for us. What's the long-term vision behind these sort of short-term profitability trade-offs? This is where it gets really interesting, doesn't it?
Right.
For many growth-focused companies, intentionally investing in future expansion often means accepting lower margins today. It's a strategic gambit, really, betting on a much larger payoff down the road.
It's that classic balancing act, isn't it? Investing versus immediate profit.
Totally.
And you can really see what they're investing in when you look at the engine of their growth.
Yeah.
Users and monetization.
The core of the platform.
Their user growth is just robust. Mercado Libre's unique active buyers reached 71 million.
71 million. That's a lot of people buying things.
It is. And get this, they added 14.4 million unique active buyers in Q2 alone.
Just in one quarter. Wow.
Yeah, which translated to a very strong 25.4% year-on-year growth in unique active buyers.
Okay, and is that growth rate itself glowing or slowing?
Well, to put that into perspective, this quarterly growth rate was actually higher than their 2-year average growth rate, which was 20.8% annually.
Ah, so it's accelerating.
It suggests these new initiatives they're pouring money into, like the free shipping, the Mercado Pago campaigns, are genuinely accelerating user growth, not just sustaining it.
That's a key point. It shows the investments are actually working, at least on the user acquisition front.
Right. So maybe let's connect this for the listener. Why are unique active buyers so crucial? I mean, why is that number so important for a marketplace like Mercado Libre?
Oh, it's fundamental. For a platform business like Mercado Libre, more active users mean, well, obviously more transactions, but it also means a stronger network effect.
Explain that a bit.
Sure. More buyers attract more sellers. More sellers mean more product variety, better prices maybe. That attracts even more buyers. And then you can layer on services like payments with Mercado Pago, logistics.
It goes the flywheel.
Exactly. It creates this more vibrant, more defensible ecosystem. It gets harder for competitors to break in.
Okay, got it. More users equals a stronger moat, basically.
In essence, yeah. And then, of course, they need to monetize those users effectively through various services. Which brings us to another critical metric, revenue per user, or ARPU.
ARPU. Yep.
ARPU gives us a window into their monetization efficiency, specifically how much they're earning in, say, transaction fees from each user. It reflects things like average order size and their take rate, the percentage cut they take on each transaction.
And how did their ARPU look in Q2?
Mercado Libre's ARPU in Q2 clocked in at $95.63.
$95 per user. And the growth?
It grew by 6.7% year on year.
Okay, 6.7%. Now that's quite a bit slower than the user growth rate we just talked about, the 25.4%.
It is. That Q2 ARPU growth was slower than its user growth. However, it's worth noting its ARPU growth averaged an exceptional 15.4% over the last 2 years.
Okay. So still strong longer-term growth in how much each user spends or generates.
Very strong. And I think a key takeaway here is Mercado Libre's ability to simultaneously increase monetization, getting more revenue per user, while growing its unique active buyers at such an impressive, even accelerating rate.
That does seem like a tricky balance to strike.
It really reflects the underlying strength of its platform, I think. It tells us their users aren't just growing in numbers, although they are, but they're also engaging more deeply and spending significantly more than last year. That drives higher value for the company, even if the rate of ARPU growth dipped a bit this specific quarter.
Right. So they're successfully getting more users and getting those users, on average, to spend more over time.
Exactly. That's the powerful combination.
Okay, so let's try and connect all of this now to the bigger picture. Mercado Libre's sustained momentum and maybe the future outlook.
Yeah, let's zoom out a bit.
Looking at their long-term revenue performance, Mercado Libre's sales grew at an incredible, a strong 39.7% compounded annual growth rate over the last 3 years.
39.7% CAGR over 3 years.
That's good.
That's fantastic growth.
It significantly surpasses the average consumer internet company. And it clearly demonstrates how well their offerings, the e-commerce, the fintech, resonate with customers across Latin America.
No question. The demand is clearly there, and they're capturing it effectively. What are analysts expecting going forward?
Good question. Looking ahead, sell-side analysts, the ones working for investment banks who issue buy-sell recommendations, they expect revenue to grow 27.8% over the next 12 months.
Okay, 27.8%. So still very strong growth, but a deceleration from that near 40% three-year COG.
Right. It is a deceleration compared to the blistering pace of the last 3 years. But you have to say, it's still an impressive, almost eye-popping growth rate, especially given their already considerable scale.
Absolutely. Growing almost 28% on top of a multi-billion-dollar revenue base is significant. It implies the market is, well, baking in continued success for their diverse products and services. They expect the strategy to keep working.
It seems so. So what does this all mean when we put it together? What's the kind of the summary here?
Well, I think it means Mercado Libre clearly remains a high-growth company. It has incredibly strong user acquisition, accelerating even, and solid monetization strategies, even if ARPU growth fluctuates quarter to quarter.
And the margin pressure.
Margin pressure seems, as the company stated, like a deliberate investment choice. Despite that short-term pressure on traditional profit margins, the underlying trends, booming free cash flow, accelerating user growth, they really paint a picture of significant strategic strength and long-term potential.
So the narrative holds together if you look at it as prioritizing growth and ecosystem building.
Exactly. It looks like a textbook case, really, of a growth company prioritizing that ecosystem expansion, that market share grab, over maximizing immediate bottom-line optics.
We've seen how Mercado Libre's strong revenue and user growth continues, even as these strategic investments in things like free shipping and Mercado Pago campaigns impacted short-term profitability. These aren't just costs viewed in isolation. They are clearly aimed at strengthening their overall ecosystem for the long run, positioning them, presumably, for even greater market dominance down the line.
Yeah, that seems to be the rationale. So maybe the final thought here is, given Mercado Libre's persistent high revenue and user growth, which seems fueled by these strategic investments designed to benefit users and the ecosystem, what does its Q2 performance really tell us about that delicate balance?
The balance between immediate profitability and securing long-term market dominance.
Exactly. Especially in a rapidly expanding digital economy like Latin America's. And maybe what might that imply for how you, the listener, interpret other company reports that show similar contradictions? Strong top line, weaker bottom line. Is it always bad news, or sometimes is it smart strategy?
Something to consider, definitely. As you encounter other company reports and market news, compelling thought.
Subscribe to my channel Report Stock.